Welcome to Bar Charts Market on Close. I'm your host, John Rowland, Bar Charts Senior Market Strategist. Now, we've all heard the expression, April showers bring May flowers. But have April crashes brought May bull flashes? And just as some flowers bloom first, like daffodils and tulips, some sectors lead the way to positive gains. We'll look at two of my favorite stocks and assess where they might be heading. And gold's luster has quickly tarnished. Is it time to panic or a pause for a purchase? All that plus your questions. And to help me out is my co host, Mr. X. Hello, Thomas.
Hello, John. How are you?
It is Friday. TGIF, everybody.
What a week. Finally, right? It just like the Bulls just let out a collective sigh of relief, John. Finally, right?
I like your tweet where you had the little teddy bear was in the ICU unit or something.
Bears have returned home where they rightfully belong, right, John? All right, so we got a jam-packed show today, guys. Just a quick reminder for everyone watching directly on our website. If you want to ask us a question, just click Ask a Question at the top right. You'll see it in orange. If you're watching on YouTube, just go ahead and ask those questions directly in the chat. And as usual, John and I will try to get to as many as possible. All right, John, so let's jump in. S&P 500, John, it looks like it's headed for its 9th consecutive green day. Fun fact, John, this would be its longest winning streak since November 2004, roughly
Really?
1 years ago. I was kind of shocked when I discovered that, John. But I think that just speaks to maybe how oversold the markets were. They were just kind of waiting for that bounce, and this bounce has been strong, and the bulls are loving it. John, here's the question for you, though. Is this sort of a mirage? Are we getting fooled, or are we climbing that wall of worry with sights for an all-time high? What do you think, John?
I'd say I would leaning towards the latter. Over the last couple of weeks, we've been talking about these roadblocks or obstacles or places where the market would have to chop wood, so to speak, and that every time we've come to one of those levels, we've cleared them. And so let's refresh what we've been kind of looking at. So here we go. So, we were talking about, first of all, it was on Mariposa, which we got above. We got a nice movement above that. And then we had the gap. We filled that. And then this gold line was a level of support and resistance for multiple months. But it also was a confluence of a lot of Fibonacci activity as well. So we got above there. And I believe the 50-day moving average was there. So now where are we at, Thomas? So, we've cleared those targets. Now let's go to the moving averages here. And what I kind of see here is, our next target is the 200-day moving average. That is something very significant for us. We really need to recapture that to really become very, very bullish. But notice also that there's this little red circle here. This represents the most recent lower high. In a bear market or a downtrend, lower highs act as levels of resistance. So the two of them together, another confluence, is going to act as a level of resistance. Now, if we change our market look from just a regular chart to Bollinger Bands, you guys know how I love Bollinger Bands. On the daily Bollinger Band, we have gone from oversold, crossover in the mean reversion, and now we're getting towards the outer band. Now, the positive here, though, Thomas, is notice that the band is turning out. That's usually a good sign, especially whatever trend or price action is in motion. That's a good sign that we're going to probably expand that range a little bit. But again, the upper band falls right in that level, right around our 200-day moving average and some recent highs. So, that's where I'm kind of watching for over the next couple of days or next week. Now, this does not mean if we clear that we're going to go one-way street all the way to the all-time highs. We've talked about that we want to see the market make new high and then make a higher low. So this would be an opportunity for it to make a new high, but we still really wanted to make a higher low. So that's the good news. The the caveat here, not bad news, but the caveat here is if we look at some other technical tools, for instance, moving at MACDs and RSIs. And I'm going to give you a little bit of different perspective than what you might classically know these two indicators. So first of all, let's look at MACD. So yes, we see the histogram telling us we have positive momentum. That is a key to our argument here. But we have the MACD line has just crossed over the 0 line. Typically, when you get that action, that is an indication that you have identified an uptrend, but it just got there today. So it's, it is kind of a lag, but notice the signal line is still below. So we're getting this diversions between the signal line and the MACD line. So we would really like to see is as we attempt to get above the 200-day moving, we would really like to see the signal line get above the 0. Again, if we correct, that's okay. That's fine. At that point, we probably would stay near the 0 line. But that's really where we get that confirmation from the MACD. Now, RSI. Now, look at the RSI here. This is this one here. Now, again, some of you are looking at this at RSI at the daily level, you would say, oh, well, we're not overbought. That's a good indication. There's a lot of room for this market to run. And I would say if we were in a bull market, yes. But we're not. We're definitely still in what I would classically call a bear trend or a downtrend. And so what happens in downtrends with the RSI is you get this kind of shift. And what happens is that 60, this little shift, this 60% becomes kind of in a level of resistance. And you can kind of see that back here, right? We didn't get above 60 as we were trying to make all-time highs. But you will notice that in downtrending markets. What I really would have liked to see here is as we were kind of getting above these levels right now, I would have preferred to see an overbought condition. That would really tell me that there's a lot of strength, and then I'm looking for that correction. So again, something that we want to see is if we can get the RSI above 60 on its way to 70 as we take out this high and that 200-day moving average. Again, I don't think this is a negative. The negative on the RSI was if this turns around and falls back below 50, then then all bets are off. So again, where could we think about a drawback, right? So we would want to be a drawback somewhere at one of these previous roadblocks or speed bumps. And I think the obvious one for us to look for is at the 50-day moving average and this confluence of the golden line here of this past level of support and most recent level of resistance, and that's around 55.80. So that's kind of what I'm looking for over the next, say 3 to 5 days or in the next week or so, Thomas.
So, John, there's been a lot of focus on Mag 7 stocks of late. I obviously have done, for those of you who follow us on X, I talk a lot about Mag 7 stocks. John, Microsoft just got above its 200-day. Meta just got above its 200-day today. Tesla's right at its 200-day. We're going to talk about that a little bit later. But, John, financial stocks are also looking really good. Now, on our last show, we covered the Goldman Sachs $2 million insider buy by John Hess. We thought, hey, maybe John knows something. John, normally when financial stocks lead, it's a good sign for the economy. So do you think that's what's going on here?
Yeah, we've looked at this before, this sector rotation. And again, I want you guys to kind of concentrate more on the market cycle, less about the economy cycle. But you will see there's kind of this divergence here when we look at what sectors. And so you can kind of see in a bear market, right? Staples, healthcare, utilities, that defensive, right? That's kind of where we would see the leadership in the market. And then as we kind of turn that corner, you can see that you've got financials, technology, and then industrials. And so, yeah, we've seen a lot of activity in the financials, something that we've looked at in the past. And also, what I'm going to show you is there's been a lot of interest in the industrials. So let's do this. for you who are not familiar with a lot of the cool tools that we have at Bar Chart. So I'm going to go under our stock performance page, which is over here. You can see that market performance. And again, one of the cool tools is here's a little graph that you can look at each sector and you can compare it and you can change the timeline. But I want to go down here and we talk about this 50-day moving average a lot, right? How this is kind of really that linchpin of telling us if we're in a bull market or a bear market. So again, consumer staples, utilities, healthcare, those were the ones that were showing kind of leadership. So if I click on just this little symbol right here, or this percentage, you can see that, yeah, utilities, these are number of stocks that are above the 50-day moving average, right? So, yeah, here's the little crash where, all markets, but you can see the leadership it was in utilities for a long period of time. More utilities were above the 50-day moving average. If we look at, for instance, staples, we're only at 50% here, but again, you'll see that the leadership was there. We were above 70% for most of the time through March, right? Again, there's a crash, but we're not really recovering, right? Okay, but let's look at those two sectors or three sectors that we're starting to rise, right? As that curve is starting to rise. So industrials, look at this, 91% above their 5-day, 96 are above their 20-day, and 62 are above the 50-day. And if we look at that chart, look at this, right? Here is the leadership of the market. I know it's kind of weird, but look at that, right? We're seeing more of those stocks are getting above their 50-day moving average. And again, let's look at financials. Again, 92, 92, and 60. And again, another one where you see that, we kind of have this little breakout of stocks that are above their 50% above. Now, this one looks like there's a little bit more room to run in terms of leadership. But again, this is what we're kind of seeing is this kind of sector rotation out of more of our defensive into this next sector. So one real quick thought here is, so here is the industrial, I think. Did I put up? Yes, industrial. So if you're curious, what stocks are in the industrial sector. And I just want to show you, did this by performance. And if you don't remember these two stocks, we've talked about these two stocks. Actually, we've talked about all four of these stocks. But Quanta is the company that connects AI data servers to the power grid. They literally make the transmission lines. And Veranova is somebody who helps build the data centers. So we're seeing AI, the tech part, and this is really the industrial part that is going to benefit from AI coming back into play. You can see those results. Now, the other thing that I wanted to show you guys today is, I have a lot of screeners that I look at. And, what I've noticed of recent is a lot of new buy signals have been coming in the financials. And that's kind of what I told Thomas. But today, obviously, live markets, they don't really show that today. But I want to show you the golden cross, which is where the 50-day moving average, again, something we just talked about, is above the 200-day. And now there's 560 stocks that have that characteristics. So I want to just kind of show you this. This is really fascinating. And you think about what's going on with tariffs and all the talk about money flowing out of the U.S. equities. But look at how many foreign banks are on this page. Not only foreign banks, but then if I scroll it down and go to, let's say, financials, right? Consumer loans, investment banking, miscellaneous services, right? Financials. And if I go a little bit lower, we get into insurance, right? And insurance falls into that financial sector. So again, a lot of leadership in those two sectors, and that is a bullish sign for the broader market, Thomas.
All right. A lot of good news here, John. And we're going to have some more good news for people, those of you who are long Tesla. Now, John, everybody who's followed us knows Tesla is, in fact, one of your favorite, not just stocks, but just favorite investments in general. And, it's a name that's always in the news. Seems like we discuss it a lot. I was actually hesitant to do it this week, John, just because we've talked about it quite a bit. But there's a few interesting things going on with Tesla that I think warrants a discussion. So first thing that caught my attention, John, in this name is an insider buy. Now, it was by a board of director member. His name is Joseph Gebbia. Okay. He bought $1 million worth of Tesla shares. Now, some of you are probably thinking $1 million, man, that's chump change, John. And maybe it is, but here's the important point. It's the first insider buy in Tesla since November 2020, and it's the largest insider buy in Tesla since Elon Musk bought $10 million worth back in 2018, John. So I thought that was pretty interesting. And it also kind of continues our running theme, right? We talked about the insider buy in Nike a few shows back. We talked about the Goldman Sachs insider buy on our last show. So it just feels like people in the know, all right? People who, they had their finger on the pulse of what's going on. They're showing some confidence and they're buying some shares, putting their money, right? Putting their money where their mouth is. Love to see that. The other thing that's interesting, John, is we covered Tesla back in late March, and we talked about a pattern that is very rare and very bullish, and it's called the double hammer pattern, which occurred on the Tesla weekly chart. Shares are up about 7.5%, 8% since that happened, John. So I think it's worth a follow-up, John. Are you still bullish? Are you seeing signs of hope and promise here? What are you seeing in the charts?
Yeah, well, if you look at this, the candlestick is, you got to take it in context, and we'll look at another example of candlesticks in a second in terms of context. But it also can kind of give us an idea of where we might anticipate the market. The other one that I have here, this little blue shade area, is Bollinger Bands. You guys know how much I enjoy Bollinger Bands. So we had two piercings outside it, but then we had buying pressure to push the market back in. Typically, that would be a sign for the market to go what is called back to a mean reversion, back to the mean. But notice that with this next candle right after our two bullish candles, we got this big movement up, and then we got what was an inverted hammer. So this kind of defines a range, right? Here's the low end of the range, and here's the high end of the range. This would be on the weekly chart. Now let's drop down to a daily. What we see here is, well, let me go back for the week here because I need to post something up here for you. Notice this upper blue line. We're going to reference this in a second. This upper blue line is the mean at the weekly level. That's going to be our target. That's what we're going to try to achieve, right? Now, here's the daily Bollinger Band. Now, what do we see a little bit different here is that here we see kind of a sideways market action. And what is really seen is, since we made those two bull hammers, we've come back and tested this level down. You can see there's that bearish hammer, but you can see we've been here now 2, 3, 4 times on a daily basis. We're kind of knocking on that door. Now, I think if I go down to a lower time frame, maybe like a 4-hour or 2-hour chart, there could be a potential cup and handle here. I think you could do that on your own. But let's look at if we could get a close above this blue line, then I really do believe that there could be some momentum in Tesla that would take us, again, to that mean reversion on the weekly. So here's, again, do I jump in and buy Tesla here? I don't know. I really would like to see a little bit more of a stronger confirmation. Could there be a momentum trade here? I think that's probably a more likely scenario. For me, I think always I like to see, I use this tool, technical analysis tool, where I look at the average true range when I'm looking at when I have a range-bound market, when it's breaking out of that range to confirm that I have a new trend. And so you can see that the average range for Tesla is, just under $20, $18.50 or so-ish, right? And so I like to get 1.5 to 2 times that value. So if we figure about, 2 times is $40, and 1.5 times is what? $32, $30-ish area. So, again, if we look at this blue line at $291.60 and then we add $40, well, gosh, we're getting right near our mean reversion. So that we would just be getting that confirmation as we're getting to a level of resistance. And what also I noticed, Thomas, is that this level, this mean reversion level, again, talking about confluence, here was a level of significant support multiple times, and it's also the top of this breakdown candle where the market fell away. So again, another area of major resistance. So, you could maybe look at a straddle or a strangle trade, maybe thinking about these two levels. I was going to do that, but I want to kind of move on to some other stuff. Look at maybe a 325, 257-ish strangle for, let's say, between now and the middle of May, the May expiration. I think you'll find that you'll probably capture this range. And if you feel that we're going to stay in that range, then I think that would be an opportunity to play that kind of that momentum, or capture the price movement inside of that range if you're not feeling overly bullish on Tesla. So keep that one in mind. All right, Thomas?
All right, John. So let's jump from one high flying stock to another. And that, of course, is Palantir. Now, John, I just teased this. I used two words because it's really that simple. Palantir domination. Because honestly, John, I don't know what else to say about it. Share price is approaching its all-time high that it set back in February, which is just, to me, John, that's astounding, because you've got the Qs and the SPYs still trying to find a way to get above its 200-day. And you got Palantir here, which is just a high flyer. Valuations are kind of crazy, and it's sitting right at its all-time high. So, John, Palantir, much like Tesla, is not maybe something you own, but is it looking somewhat appealing here?
I got to admit, I've never been a fan of this stock. I don't own it directly, but again, if you have a tech ETF, or you're a passive investor and you have any kind of cybersecurity ETF, or you're in one of the tech ETFs, you do own it. And so in that disclosure, I do have Tesla in my portfolio, but it's in a passive account. But yeah, I've totally gotten this one wrong. And now there's a lot of reasons why I don't like it, and there's only a few that I do like it. Now, if I look at this and you didn't tell me what this chart was, these are the kind of stocks I want to buy. These are the kind of charts I like, right? A lot of higher gap ups, upsloping moving averages, making higher highs and higher lows, all that thing. So all that is a positive. So I can't dispute that. But as you know, that sometimes, we got to kind of take a step back and say, hey, what are we actually buying? Or what do we believe that this stock is doing? Now, Barron's came out, or I think it was Barron's today, came out with an article. And I was laughing with Thomas before we came on the show. It was like they were listening to our meeting yesterday, our production meeting, like all the facts that we were going to talk about. But here's what I want to kind of show to you guys. And this is kind of that grain of salt, right? So Palantir right now, its market cap it's a $270 billion company. All right. So what I did was I went into our stock screener and I took the S&P index 500 and I just said, okay, show me all the companies in the S&P 500 that have above $250 billion. And there's only 30. Right. And look at some of these names, right? We've all known these names, right? Apple, AV, Amazon, J&J, Microsoft, Oracle, NVIDIA, and there's Palantir. Okay. And then we look at this from a performance basis, right? Well, okay. Well, who has the best alpha? Palantir. Who has the highest return over the last month? Palantir. Who's the highest return over the last week? Palantir. Top of the list. But let's take it back and look at fundamentals. And let's look at PE. Who's at the top of the list of the most expensive PE? Palantir. Let's look at it from a earnings per share. Well, then it changes a little bit, doesn't it? That Palantir goes from the top of the list to the bottom of the list. And if we look at it in terms of net income, again, here's the top of the list, to the bottom of the list. And so here's the facts that Barron's put out, and these were facts that I was going to share with you anyways. So estimates that revenue is going to be up 36% this year. That's going to be about $86 million, and earnings will be up 62%. Very impressive for a tech stock, right? It's trading at 69 times its sales. Now, I want to put that in perspective. The closest stock to that would be Texas Pacific Land, which is, Thomas, remember that company? That was,
Yep.
Murray Stalls, who was he bought like 10 shares of stock every day for like, what was it, 5 years or something
and then a few days after it was added to the S&P 500, I believe, John.
Yeah. So that company's, which was a very inflated company as well, it was only 31. Analysts are calling for growth of 31% in 2025. So here's the takeaway, Thomas. You get what you buy. And even if Palantir grows at 50% over the next 5 years, it will still be the most expensive stock in the S&P 500.
You know, John, I don't do it often, but if you allow me, I would like to take a little bit of a victory lap on Palantir.
I will pat you on the back, my friend.
Late last year, right, we covered Palantir, and we covered the valuations. It's a long-running theme. Hey, the valuations don't make a lot of sense. But, John, you know, for months, I was looking at Palantir's chart, and I was just watching the dang thing just go up and up and up, and the market didn't care about the valuations. So I did a little bit of revenge trading, John. I was upset that I wasn't in it. I just said, you know what, screw it. There's obviously something I'm missing here. I'm just going to buy some because I need some exposure so I can participate in this upswing. And that was when price was in the low 80s, John. So I've got a little bit of Palantir. I'm enjoying the gains. I'm enjoying the productivity in the charts. This is not a strategy, guys, I'm recommending, but it sometimes it works out, huh, John?
Hey, listen, I got to take my hat off to you. And at this moment in time, you are a better trader than I am. So congratulations.
I'll enjoy my one day. All right, John. So let's move away from equities and go to gold. The reason we're covering gold, we've covered it quite a bit, but we're covering it again because it stumbled a little bit, John. Now, this was kind of to be expected. You've talked about price levels in the past. We had a couple of interesting sort of indicators flash, John. We had a shooting star on the daily chart, which I'll let you talk a little bit more in detail. But we also had gold on the monthly chart, which hit its most overbought level, highest RSI level on the monthly since 2008, I believe, John. So 17 years ago. That's something. So we knew a sell-off was coming. We just didn't know exactly when. What are you seeing now, John? Do you think the sell-off continues, or do you think it's just going to go into a sort of consolidation phase?
Yeah, I think there's a couple things going on here. First of all, I think gold's rally was kind of reflective of the fear that was in the market, and it was serving its purpose as a safe haven. I think a lot of capital flew into it. So yeah, I think gold did what it should do, what its mechanics says it should do, and that's what we got this big rally. But again, let me change this again one more time. So yeah, here's the weekly chart. And again, there's that shooting star that you were talking about. Now, it's important when we talk about candles, candle formations, that you always have to look at them in context. In other words, a shooting star needs to be at the end of an extended uptrend, or there should be other conditions that tells you the market is overbought or oversold if it was, let's say, a morning star. So in this case, where are we at? Well, we were way outside the Bollinger Bands. That, again, is indicative of something that's telling us that the market is it's gone too far too fast. And now we're back inside of the Bollinger Bands. So the combination of the shooting star and Bollinger Bands tells us that there's a higher probability that we're going to get to a mean reversion at the weekly level. But we still are in this major uptrend. So we have to look at where we came from to give us permission to go to the mean. So you can see here, this is green candle here. The low of that green candle comes in at 3208.70. So what we really would need to see on the weekly level is price go below that level and then close below there next week. That was, and I mean literally next week, not kind of laboring around for a couple weeks. Now, if we change our time frame, look at our daily. See, we got a shooting star there, gap down, and we did get that mean reversion. So this is kind of how Bollinger Bands work. But you can see that level, same level, and you can see where it is. So we're right at the mean. We're a little bit below it, but we're right at it. So the theory says when you get it from an overextended position and you snap back to the mean and you don't hold the mean, then you might go to the lower band. And notice that the lower band falls in that range of the mean of the weekly band. So, again, I'm still bullish on gold. I don't have it in my portfolio. I've been looking for an opportunity to buy, and I really would love to see gold pull back into this range. And you think about it, especially if we see a lot of enthusiasm fall back into the stock market, as capital flows out of gold back into the equities market. So you can see where my range is here. So it's just a little below 3,000 to about 2,920. That's kind of where I'm looking for. I don't know if we're going to get that, but that's what I'm looking for, buddy.
So, John, if it did go to sort of just below 3,000, would you be a pretty heavy buyer of like GLD?
Yeah, I would be buying the GLD, and I would be just buying what it would be my allocation that I would use for my gold part of my gold portfolio. Yes.
Okay. Great stuff there, John.
All right.
So, John, we've got a bonus segment for folks today.
Yes.
We have a huge sporting event coming up, and that, of course, is the Kentucky Derby. Now, John, I've tried betting on the Derby at times in the past, and I'm basically just lighting my money on fire. Do you have any better ideas for people who like to watch the ponies?
Yeah, I've bet on the ponies on an occasion. I actually lived when I was working on Wall Street. I lived in New Jersey, and I lived like maybe 3 miles from Monmouth Park, so I spent a lot of time there. And I actually created a spreadsheet system based on a lot of different metrics, past performances, jockeys, owners, breeding, all kinds of crazy things. And my system has done very well. I've been doing this about 40 years, and my system typically picks the winner 1 out of every 3 years, so about 30% accuracy. But even if I don't pick the winner, my horse usually finishes in the money. So I did it again. I did the segment. Now, I didn't get an outstanding. I usually get one outstanding horse. But we got a tie. And so the 2 horses to tie on my system are Sandman and Tiztastic. Sandman is 6-1. He's coming down the 16 post. I'm not a big fan of horses that are in that auxiliary post, but Tiztastic is 20-1 and the morning line, and he's inside. I think he's in the 14th or the 13th post. So those would be my 2 choices. Now, Journalism looks like the best horse. He's also the favorite at 3-1. So if I was using exactas or trifectas, I'd be mixing him in with there. And the other horse that fell just below those 2 was a Sovereignty. So that would be my basket of horses I'd be looking at. But I'm going to go with Sandman as my choice. Although I hate to say it, but I wouldn't be surprised if Tiztastic would beat Sandman only because he's got a better post position. So keep that in mind this weekend, and we'll see how we do when we come back next week.
And just a disclosure for everybody, gambling is bad. We're not encouraging you to gamble. You'll probably lose all of your money. This is for fun and informational purposes only.
Well, gambling and trading do have a lot of cross characteristics, and so Kentucky Derby Day is one of the biggest betting days of the year. So there's a lot of dumb money in the market. So that means that payoffs are usually really huge. And so if you do well, you usually get a nice payoff. And again, retail traders and retail horse players, they tend to play hunches, or they tend to play the favorite. So you get a lot of money that goes on those ones. So as long as the favorite doesn't win in some crazy outside hunch horse. Now, the hunch horse, you want a hunch ticket, Thomas?
Let's hear it.
Chunk of Gold, 80-1, I think is the value on that one.
All right. Well, we'll revisit this in the next show. All right. So, John, we've gone to about 3:05. You ready to do a Q&A session?
I am today.
All right. So, first question, John, it was emailed to us. It was from our longtime viewer, Matt. He wants to know, he thinks a recession might be coming, John. A lot of data points to a recession possibly coming at some point. Should we be going after defensive stocks if such an environment arises?
Well, man, I would say that, I don't know where we are in the economy. I've actually been saying that like half our economy has been in a recession and half it is not. But notice, again, market is always looking forward. That is one of the takes that you have to be aware of. So at a full recession, notice where the stock market is. It's at the beginnings of a bull market and what sectors. This is the kind of what the analysis that we just did. The time to be in the defensive as we were rolling over. Now, again, if we roll over and we fail at the 200-day moving average and all that other stuff, then I think money will flow back into those more defensive stocks. Money's already in that. I've already shown you that the money's already in consumer staples. It's already in utilities, right? We kind of want to look for that alpha. Where is the next wave going to be? So, yeah, I think even if we go into a recession, I think the market will be forward thinking and thinking of what the Fed's going to do, or if we're going to get this more clarity on tariffs. And those industries, the ones I just talked about, industrials, and maybe even start thinking about basic materials. I think those ones have been downbeaten, and those are the ones who are going to perform. Just, man, look at some of the consumer staples. Look at like P&G and Kimberly-Clark and Hormel. I mean, those charts do not look healthy to me. So just keep that in mind, Matt.
We got a question here, John. What are hedge funds doing? So we don't really have hedge fund data on the website. I do. If you guys are following us on X, I share a ton of data on what hedge funds are doing. I haven't seen a ton of late. In February and March, hedge funds were dumping fast and furious, John. I mean, they were dumping like you can't believe, like there was no tomorrow. So I'll try and look for that, guys, and I'll update you on our X account. I will say, though, John, I just saw an interesting data point yesterday from retail traders. In the month of April, retail traders bought $40 billion worth of equities and ETFs. That is the highest in history, John. So retail was buying the dip.
And to me, I think that is kind of a cautionary tale, right? I would like to see, maybe not hedge funds, but I would like to see more institutional buying, C-suite buying, like what you were saying. So that, again, why I like this bull move, but what I would like to see is, real money coming back into it. Not that retail money isn't real money, but, institutional money coming back into the market, coming out of gold to be a fact.
John, do you have any thoughts on Google?
I just think it's part of one of those Mag 7s. I think is a stock that, they have a monopoly. If you want to own, best of breed, I mean, obviously this is the best of breed, but I saw something today or yesterday that the DOJ wants not only, we talked about this maybe 6 months ago, that there was a court case about breaking Google up. So I think that news story is going to have a negative effect on it. But if you break up Google, I think that's a buying opportunity.
Yeah, I have a little bit of Google in my portfolio. It's definitely struggled a little bit. It just feels, John, like Google has among the Mag 7, like Google is just facing the most headwinds out of any of the other Mag 7 stocks, and I just wonder if it's going to be a drag on the performance relative to the others.
Well, it's been an outperformer for such a long time, and again, we talk about leadership, but usually what happens is you have a set of stocks or sector that leads during a bull phase, and then when you get the correction in the next bull phase, you get another group of leaders or leadership. So you rarely do you see the same one. So I think the noise of what's going on with Google on with legal issues with the DOJ is probably going to dampen it. But I mean, I think you look at like companies like GE or I can't think of it right offhand. Companies that have had the kind of a monopoly and then they've broken them up. The value of the parts is greater than the whole, right? So I would be all over Google if they said they made them break it up.
John, are you familiar with the Basel III Accord and its relationship to gold? Is that something you follow at all?
No.
Okay. So then let me take the second part of this question, which is, do you think global central banks, do you think they're going to continue to load on gold at these prices, or do you think they're smart enough to recognize when things are getting a bit out of hand and wait for new opportunities?
I wish I had that answer. I wish I sat in one of those meetings, right? I feel like the central banks here are kind of cutting their nose off to spite their face, moving away from the dollar and U.S. equities to go into these safe haven and gold. Now, is that right or wrong? I don't know. I mean, in the long run, gold has been one of the best performing assets for like the last 10 years. So I would not, trend your friend into the bend in the end, so to speak. So I would not dispute the fact that it would continue to go. But again, we talked about how fast gold has gotten. It's not like a tech stock, right? And if you think of the returns on gold over the last year or 6 months, it's almost like Palantir-esque. Should I say that? I don't know. So again, I would think that to me is more of a cautionary tale. I think every trader or investor needs to have some gold in their portfolio. Like year to date, it's up 20%. Last 52 weeks is up 32%. The last 5 years, it's almost up 90%. So take it as you're worth.
All right, we got a question on Bitcoin, John. So Jeff says he's been tracking the assets under management for the Bitcoin ETF. That's IBIT. And he's noticed that it's been increasing. And I've noticed the same. Bitcoin has had some pretty strong inflows, John, over the past few weeks. Do you think that's a confirmation that Bitcoin strength is back? Or do you think it's just kind of just following the stock market right now, John?
It's certainly a risk on. I think it's if you look at a correlation, so what's the tech? Is it ITK, right? Is that right? IXK?
I am not.
I forget. What is the tech symbol? I don't know. I'm having a senior moment. But if you okay, let's just do it against the NASDAQ 100. I really feel like, and again, this is hard to see here, but I really feel like what we're seeing in, it's a kind of a risk on, risk off. Let me see if I can make this better for you guys. I feel like it's kind of following the tech market, right? So it's a risk on play, but you got to give me some credit, backdoor credit, right? Because I've been wanting to do. There we go. That's a little better. I've been wanting to do a Bitcoin segment for a while, haven't I, buddy?
Yeah, you have, John. You have.
And it did break this downtrend. And again, we talk about breaking trends and confirmations, right? So, what is so it's about 3,000 on this one. And go back to the chart. So a breakout from that trend. So somewhere between 6,000 and 5,000. So that looks like, that high right about there was around 85,000. So when we got about 90,000, that was really a confirmation that, we're on to something here. So I think as long as the stock market feels good, as long as the tech market feels good, I think as long as investors are not as fearful, then I think I would not be surprised if Bitcoin will try to test its all-time highs sometime between now and the end of the summer.
One thing to be cognizant of is if the stock market does kind of roll back over, John, and head lower, which some people think is going to happen. I would expect Bitcoin to follow that. And what I'm looking for, sort of my comfort level, John, is sort of in that $73,000 level. Now I'm looking for Bitcoin to hold above 73,000 in order to sort of maintain market structure, John, and also sort of keep intact that 4-year cycle theory that we've talked about before. If I see it close below 73, especially sort of maybe with back-to-back weekly closes, I'm going to be really scared.
Yeah, I think at this point, I don't think you really wanted to go back to 73 because it's already tested kind of that level already. I would say somewhere between 73 and where we're, let's say we back off from the highs. I would say around that 85 level, that 85, 90 level is probably really where you want it to hold. But I know you did say that we are coming into that cycle where in the crypto space, you could see as much as a 60% down movement in some of these crazy cryptos, right?
Yeah, I mean, if you're a 4-year cycle proponent, it's getting to the point of now or never, right? I mean, we're getting into the second half of this year should be historically that should be a really good time for Bitcoin, and the back half, the last quarter should be a really good time for just crypto in general. So
if you think about that that really negative 4-year cycle from our all-time highs, that's what this bottom red line here, 42,000. I think we did that analysis. It's like, okay, well, what's the average downfall that Bitcoin has in one of these cycles? And I think that's the value that we came to. I can't, if I remember correctly.
Yeah, that sounds about right, John.
Okay.
So we got a question on the dollar index, John. Where do you see we did? If you guys want a full in depth on this, we covered this on our last show. But dollar's been pretty good, John, of late. It's had a good week. It's back above 100. Do you think it's going to continue higher?
Yeah, this is what we said last week. We said, hey, it had fallen to a level where we thought, and around 97.50. Right, again, look at our Bollinger Bands, went way outside. Now we're back inside, and I said, be careful, right? Tricky Dixie. Right, we thought everybody was like, "Oh, the dollar's the death of the dollar," blah 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 blah. Well, Tricky Dixie, the Fed comes out and says they're going to pause, and then they hint that they're not going to really cut as many times between now and the end of the year. I think what you're going to see is, the dollar is going to strengthen, and I wouldn't be surprised if we move back in towards the middle of this range that we've seen somewhere between, 105 and 100. And you can see the mean reversion for just on the weekly is 105. If you look at the daily, I think it's around 102. Let me see. So we've got that mean reversion, but the outer band would be right where this breakdown candle is, around 102. So I wouldn't be surprised. Yeah, so I'm kind of bullish on the dollar in the short run.
All right, I guess this is a sort of a tie into the Bitcoin. Thoughts on micro strategy, John? And
you just like sticking it into me, right? Another one.
Covering your favorite assets today, John.
Can I take a pass on this one?
Yeah.
Again, MicroStrategy falls in the same kind of idea of what, the Palantir, it's MicroStrategy is just basically a Bitcoin wallet now. The argument is, the more you own, as Bitcoin goes up, the, more valuable the stock becomes. But every time Michael Sayer sells more stock, well, he's liquidating, if you're a MicroStrategy stockholder, he's liquidating the worth of your shares. So, I mean, it's a double-edged sword. If you want to be long Bitcoin, I think there's a better way to be long Bitcoin than in MicroStrategy because you're paying, I think, something like a 50% premium over the price of the Bitcoin. There may even be more than that. I'd rather be in the ETF or than the coin itself.
Yeah, same. I own no MicroStrategy. I don't really see a reason to own it. The only time I would consider it, John, is if I felt like Bitcoin was about to blast. All signs were pointing for it to blast, and then MicroStrategy was sort of a higher beta play where maybe you could extract some extra gains just for a trade. There's not a buy and hold for sure.
Right, or because you could trade options on that, right? Where you could manage your risk a little bit better too, right?
Exactly.
Okay.
John, I think he's maybe referring to the SPX, but if you get a pullback, or would you want to see a pullback back to the 20-day moving average to sort of validate support?
Yeah, I think any one of these. Now, this is the SPY, and the reason why I like to look at the SPY because it's more tradable. It's a little bit different from the index, not much. And again, I'm also look at the futures market. So there's a lot of lines here. There's a lot of noise here. So it was the 20-day you said?
20-day, yeah.
Okay, let me get rid of the comparison to itself. Yeah. So I don't know which one of these roadblocks or that we cleared that's going to act as a level of support. So yeah, look at there's some confluence here. There's a Fibonacci here, and there's also a gap here. So it could fall below the 50-day and go back to the 20. But if I'm really constructive on this market, I really don't want to see this market give up the 50-day. But because the 50-day is still down sloping, I wouldn't be surprised if we did fall in somewheres between the 50-day and the 20-day, which would be a level of support. So again, it's how you cook your tea or stir your soup. It's really, we can anticipate, but we're not going to tell the market what we're going to do. We're going to wait until let the market tell us what it's going to do.
Guys, I know sometimes you send in, questions on random stocks, small stocks that we never talk about. We're not going to do that. We're not all of us can be Jim Cramer. We can't have opinions on everything, and we don't want to steer you guys down the wrong path. So if we don't cover your individual stock, you can go to our website and you can check out the bar chart technical opinion and see what it says about that. John, last question.
Woohoo!
When do you use, you've got obviously daily charts, you've got weekly charts, you've got monthly charts that you can reference. How do you sort of decide which of those charts are more important at one particular time?
That's a great question. And recently I just did a webinar. If you go into our archived webinars, and I think it was only about 2 or 3 weeks ago, so it should be still up there. Here it is. Trade setups, master infractors, and time frame analysis. And so in this webinar, what I did was I took the concept of multiple time frame analysis and what each time frame analysis has a certain purpose. The higher time frame, it kind of gives you this range of probability, or this playing field where you think the market is going to go, or where the path of least resistance is. Then you have a trend time frame. And that's, what is the actionable price, right? Price action. What are you trying to capture? Are you trying to, fight the trend? Or are you going with a trend? Trend's your friend. And then the lower time frame is how you kind of look for those optimal entries and how you manage risk. So I would say, I don't have a lot of time to talk about this, but I would say watch that webinar because it really goes into detail not how I do it, but what I've been taught from other professional traders.
All right. Great job today, John. Great show.
Thanks, Thomas. Thanks for being my partner today. I appreciate all your work that you do. And I know that this week was a little tough week for you, right? So
busy week. Yeah, busy week.
Busy. All right, folks. Thanks again. I hope you guys enjoyed. I hope you get something on it today. If you're watching on YouTube, give us a thumbs up. Tell us that you like us. Drop us a line. And watch that Kentucky Derby. We'll see how we do next week. Until next week, the best of health, manage your risk, and the good of all trading.